Today is January 23, 2025. This is Sam. I've got a quick recap for you about what happened with trades related to our levels from the morning. It's been a busy day for me, did not have time to trade today, and I still have some more work to do. So this will be a quick high-level recap about what happened today. I'd like to get this video complete and posted to YouTube without spending a lot of time in the post-editing part of it. So that's why you're looking at a chart of the SPY today after the closing bell. It's currently 8:22 p.m. I'm skipping over the snapshot of the email and other things that I usually show at the beginning of each video. So I'll plan to provide a few more details in the email tomorrow morning that will be sent out with the daily levels and everything, maybe to make up for this short video. The levels plotted on this chart are what were sent out this morning. And those of you who received the email this morning would know that I talked about a timing component of the market, that price and time were at a place where they could pull back some. That turned out to be wrong, at least for today. They could still do it later. Price was on a steady climb most of the day, especially toward the end of the day when they rallied even higher and they closed above the former all-time highs. That's this light blue line here. I think it was back on December 6th, I think. To get the close above that area, the bulls had the ball today for sure. There were several trades available today. If you're playing by the rules, I'll briefly explain how they should have been traded. Hopefully you can follow along. The first trade was on the long side. The price came back down into 605.92 after that 15-minute window opened, and it would have been a wash. And the reason is because this quick bounce here came within a certain amount, a certain distance of the profit objective, which would have been up here, before pulling back very quickly back to the entry point. Many times that behavior means price is going to continue to fall. It's like they almost gave the trade before failing. So jumping out at your break even was the thing to do if you're treating each level as a process. So no profit on this trade, although they did bounce eventually and go up, but we can't count this. The next trade was a short up here at 606.98. That gave a quick base hit a few minutes later. We're talking about futures trades. So the base hit is in the E-minis, 4 points as a base hit. And the ingredients were here on this level to trade it again on the other side for a recycle trade, this time in a long position, another base hit. So by the way, price did come up short of the 4-point base hit profit objective, and they got back down to the entry point later on. So why would this trade not have been treated the same way where you would jump out at the break even and call it a wash? It's because of the manner of how price came back to the entry point from where the long trade was triggered. The longer it takes price to do that, the better chance the original design of the trade will work out. This is like a little bit of a sneak peek on how some of the rules work in the strategy that I use. So the base hit of 4 ES points for this recycled trade came a few minutes later as they continued higher. So far, 2 official trades in the book. The third and last trade was a short trade at 607.93, another 4 points in your E-mini futures trades. At this point, no other trades at this level or the one up higher would have been entered per the rules. This next level here at 608.92 was not a trade because of when that level was hit. It needs to be before 30 minutes of the closing bell for these levels to work as designed. So 3 official base hits for a total of 12 points. Not too bad for simply following a set of rules. On the tracking logs, the first one is the playing by the rules log. And once again, this is just January. This is everything this year. I want to show you how the rate of return evolves over time. And this is based on a $50,000 starting balance, trading 2 contracts at each level. So you can see everything so far. Easy math, $5,000 is a 10% return so far. In my trades, I'm highlighting every single trade that I get, but I decided against doing a thing I talked about the other day where I would do my own trades and have my own rate of return based on my starting balance at the beginning of the year and all the trades, because I have to do the math for every single one of these. Whereas this is simple because it's just based on a linear 2 contracts traded per level and with a 50,000 starting balance. So this is the 14.68% is just based on these numbers here. If my balance was only $50,000, I would not be trading 4 or more contracts. So this is more reasonable. So that's what I have for today. Thanks for watching. Hope you learned something. Again, I'll probably put some more information in the email tomorrow morning. And by the way, I got an email from someone today who had filled the form out on my website, and yet they had not received any emails. So I don't know how long that's been going on, but it turns out it was a glitch in the connection, the API between the website and MailChimp, where the email addresses and the contact information is triaged. So I had to fix that. So if there's any of you out there who completed the form that's on Ticks&Trades.com but have not seen an email show up before the opening bell, it's usually around 8 to 8:30 in the morning or so, then try again. Fill that form out or to shoot me an email at sam@ticksandtrades.com. Thanks again for watching. Catch you in the next recap video. Have a great rest of your day.